I'm Eddie Cannell.
And I'm Tom Cannell.
We're the Mortgage Brothers team, everyone, and this is our podcast. And everyone, today, Tom and I wanted to just let you know that we have a podcast special. Basically, just as our listeners have been, watching our podcasts or listening to them on their podcast players, we want you to know that there's an offer we have just for you. If you mention that you've listened to our podcast and call us to get a quote or contact us to get a quote, just tell us that you've heard our podcast. And if you get a quote from us, we will give you a $50 gift card to Amazon. And it's
a real $50 gift card to Amazon.
That's right. Tom and I, we're not high pressure. We'll keep it simple. We're not going to sit there and say, well, all these conditions, need to be met. Now, it has to be a real, I want you to be real. You call in, you tell us you want to get a quote, and you mention this podcast, you've listened to it,
And we think you're going to really, really like working with us. So we wanted to come up with something special for you guys. And can we throw out like the code word zebra?
Zebra.
Zebra. That way you and I, when we're busy and someone calls and says, hey, we got a zebra on the line, then we can we know what we're working with. Okay, all right. So what are we talking about today?
Okay, today we're talking about gaps of employment. I mean, everyone.
Gaps of employment. We're not talking about working for Gap, right?
Right.
Okay.
Not talking about the Gap store, but everybody, and sometime in their life, has probably had a gap of employment. And there's different ways to understand what gaps of employment are. But basically, if you're working for an employer, someone's paying you, you're obviously employed, and then you stop working for 5 months, 5 years, that's what we call a gap. Let's just keep it that simple for right now.
Right. Okay. And basically the reason why gaps are even defined or talked about is because underwriters are looking to see what the sustainability is and likelihood of your continued to make income. So they go back and they look at what has this person done before, how much work have they done, any gaps. So here we are talking about gaps. How does it affect people? And what's our typical gap scenario?
So a gap scenario is going to come up typically someone who's either lost their job and they've been looking, they've been looking for that right fit. And it depends. Yeah. If you're in corporate, if you're high up in kind of a corporate job, you're a CFO, it can take you a year to find the right job. Right? If you're kind of entry level employment, you don't have job gaps less than 3 weeks. Right. But the point is, typical is a month or two of while you're looking for that next employment. Mm-hmm. You can let go. And so that's most typical. But we can talk about mothers who've been at home for 10 years.
Right.
So how about someone who's been taking care of their elderly parents? It could be right. There could be someone who's been disabled in a car wreck. Someone's been disabled, for all sorts of reasons, and they come back to the workforce.
Yeah. So there's many reasons why, someone may not be, making an income. And I think that's the biggest thing is you're still working, you're still doing stuff, you're helping, you're volunteering, you're on a mission in Uganda, you're just not getting income. And we're just having to explain what is the reason for that gap of income. And here we are. So I think the most typical person, at least from my perspective, is, we work with a lot of working class people. We have a lot of mothers and fathers that have either stayed home to take care of the kids and are now entering the workforce. Yeah. And they've been working for a couple months. And they call and say, hey, Ed and Tom, we're ready to apply for a loan or a refi. But I was out for a while and I'm working now for a couple months. Can I qualify? So we thought, let's do this podcast. Let's figure out how we can help our audience figure out how to work around gaps.
So we have 3 main loan programs. I mean, conventional, FHA, and VA. That's 95% of the loans really in the residential world.
Right.
And some people, so let's take the person with that big gap of employment. They've been unemployed for 10 years. And they just got back into the workforce a month ago. The answer is that person can do a loan, but it would be a conventional. We would have to put it into a conventional loan. FHA is not going to allow it. VA is not going to allow it.
Right. And the only reason why you wouldn't like conventional is if your credit score wasn't very good. So
Right.
As long as you have decent credit, that answer we just gave you is awesome. You've been out of work for 10 years or not working for 10 years, not making income. You're with a stable, big company for a month and a half or whatever it is. You can get financing.
Now, there is
unbelievable.
Yeah. And there is one caveat to the FHA loan. Take the example of a mom who's been at home for 10 years. We need 2 years of employment history on our application to show the underwriter. Even though you may not have let's just say you've only been back for 1 month. We can go back 10 years and go to your previous employment, but we still need 2 years, even if it takes us to go back 10 years to get it.
Okay.
That's one caveat to that.
So right. Okay. But when we were talking about conventional, the stay-at-home mother, the stay-at-home father, back in the workforce for a month and a half, they can get financing as long as they have the ability to write a good letter of explanation as to why the gap was there.
Yes.
Okay. So conventional financing, woohoo, awesome answer. Give us a call. We can help you. Now we move to FHA. So the biggest difference between FHA and conventional is what? If there's a job gap over 6 months, okay.
Right. If there's a job gap over 6 months, then it's doable, but they need that 2-year work history.
And it doesn't matter when that 2-year work history was. You can go back 10 years.
Yes, and it needs to be 2 years of consecutive work history. So we would have to go back into the past to do it.
Okay, so with FHA, which is where a lot of our kind of first-time home buyers will fall, our lower credit score borrowers will fall. If you are in an FHA situation, any job gap over 6 months, we don't hit the pause button, but we definitely dig in a little bit to figure out, okay, how are we able to explain some of the situations? And one of the big pieces, caveats, as you said, Ed, was having a 2-year history at some point.
Yes, and you actually do need to be with your employer for 6 months. So the most recent 6 months, you have to, so 1 month on the job won't work.
Right. Okay.
You need to have 6 months on your recent.
Good call. Okay. Now, what happens if you were a little more aggressive in getting employment and your job gap was only 5 months? If you're FHA, a 5-month gap.
Yeah, we would just wait a month.
Right. Well, would you still need the 6 months of employment since?
Yes, I think the rule basically reads that they both are required. You need to have it.
Okay.
Now, if you have a consecutive, let's see here. It basically says the employer, you have to be with your current employer for 6 months, and the borrower would need a consecutive 2-year work history prior to any job gaps.
Right.
Okay.
If the job gap was more than 6 months. If the job gap is more than 6 months.
If the job gap is, but they need to be on their current employer for 6 months.
Mm-hmm. Right. Okay. If there's a job gap though for 5 months.
Yeah. Okay. Good point. If there is only a 5-month job gap, then there is no requirement. There's no FHA doesn't care at that point.
Right.
Whether you've been on the current job for a month or not. I see what you're saying. Yeah. Good point.
Right. Okay. All right. And then anything else on FHA? Or are we going to turn to VA?
Let's just go to VA.
Okay. So VA seems to be the most strict out of all three.
Yeah, it really is. It requires borrowers to have at least a 12-month history on the current job if there are any job gaps over 60 days within the last 2 years.
So a job gap of 2 months, which is not that long, 60 days.
Right.
So that's something definitely to keep in mind. And I think if there's ever a reason as to, someone's asking, why is the VA that way? I think because the VA loan is so good. The VA loan has such a high level of insurance, so to speak, because there's that zero down payment. They're wanting to have a little more on the job security standpoint.
Yeah, that's right. Again, on their current job, they need to have 12 months history if there has been a job gap of 60 days within the last 2 years.
Okay. All right. So to kind of wrap up, conventional financing, we can work with almost any situation, provided they are full time,
right?
And they've been working for what, at least a month.
Yes, this is say a month. And
Say
again,
a month.
it's always going to be case by case. You're right. Conventional is going to be flexible because they're going to be able to look at someone's situation case by case.
Mm-hmm. Okay. And then FHA, the big point there is that whether or not your job gap is more or less than 6 months, right? If it's more than 6 months, we're not going to press pause, but we're going to dig in a little bit, and we're going to definitely find that minimum of a 2-year history at some point in your career, and you must be in your job for at least 6 months.
Yes, your current job for 6 months.
6 months. Okay. And then on VA.
Yeah. VA,
any job gap over 2 months. That's something that the VA is going to very, seriously look at. And they're going to want to have a 12-month, work history.
Yeah.
Within the last, 2 years.
And I know that we're throwing out a lot of months and explanations and things like that. Everyone, please ask your loan officer, ask Tom or I if you have any questions on this. And even if you're not sure, which it's easy to listen to these podcasts and maybe misunderstand what we're saying. So just please reach out. We'll make sure to clear it up for you.
And if you're frustrated, please don't be frustrated at us, because Ed and I are, we talk before we do all of our podcasts, and these are very live, very organic, very free flowing. And it's incredible how many situations and scenarios there are.
Yeah.
Like, did you think there are literally this many different job gap discussions? And we actually recorded one, and we had to press pause and do it again because we started going off in some, in some tangent just because there were so many different avenues. Right. So that's one of the primary reasons why you should just call. We can talk through these situations, because we guarantee you there's no way we answered all your questions today in this little podcast about job gaps.
That's right. All right. Well, I think that sums it up. And everyone, you have a good week. Time to go home.
Yes, let's go home. And remember, call us, folks, for that quote. We'd love to help you.
That's right.
The Amazon gift card.
Mention that that you heard us on the podcast. And get that Amazon gift card.
And what's the code?
Did you say zebra?
Zebra, folks. All right.
Take care.
Thanks, guys.
Hey, guys. Thanks for listening to the Mortgage Brothers Show. Please let us know if you have any questions you'd like us to answer on this podcast. You can email your questions to tom@azmortgagebrothers.com or yours truly at eddie@azmortgagebrothers.com. And be sure to ask us for a free quote on your next mortgage. Tom and I will personally work with you and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917, and 1618695, Equal Housing Lender.